From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 20th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pair majors in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Let's get started here on the USDCHF, the US dollar versus the Swiss franc. There's one thing I want to point out here on the daily time frame is the blue shaded area just underneath the parity level. If you look in the middle of the chart, there's a yellow horizontal line. That is the parity level, 1.0. Well, just underneath, there is this blue shaded area between 99.65 and 99.50. What's important about that is the historical nature of this level. Follow it back in time, and you can see these three black circles here back on the left-hand side. Resistance, resistance, resistance. Well, if you've been around trading for any amount of time, you know that historical resistance can help us identify future support. So we know now that this blue shaded area between 99.50 and 99.60 is historical resistance, and now offering, as long as we're on top of it, a clue to support. Let's go ahead and zoom it in a little bit. Let's go in twice, and you can see here that the last 2 days and now so far today have found support here at the blue shaded area. So we know that there's some consistency here in the market, and even back here with this little blue boxes, you can see that. So for the day today, very difficult place to go short. I know it's been going down for 2 or 3 days, the past 2 or 3 days of last week, but it's a difficult place to go short because we know this is clearly support. If we're going to go short, if we're looking to sell the dollar franc, we would prefer one of two things to happen. It either goes back up to resistance, kind of like what it did back here at this blue box. It went up and found resistance at the pink shaded area, just into the low 1.0s. Or the secondary thing to go short would be that it breaks through that blue shaded area. And if it does, well, the last time tells us it goes down to the orange shaded area. So those are some of the things we'll be looking for this week. If we're looking to go short, we look for a rally back to resistance, the pink zone, just into the 1.0s, a break through the blue zone, 99.50, and we target the orange zone. Now, it doesn't have to do that. If we get any positive movement for the US dollar this week, we could look for the opposite. It bounces off the blue zone, starts going back up to the pink zone or higher, and we look for a reversal of the trend again. So we want to watch for clues and evidence of support and reversal from the pink blue shaded area into that same area where we're finding support. Take a look at that. A lot of congestion that's sitting on top of that blue zone. This is the 4-hour time frame. Again, same scenario. If it's going to go short, it needs to break through here or rally back to resistance to give us lower risk and higher reward. We just don't want to speculate short on top of the blue zone. However, intraday wise, if you're looking for a long scenario, this blue zone could provide that for you for the dollar franc. Moving over to the euro dollar, it's a similar yet opposite scenario. Here, we've been rising for the past week or so, but we're running into resistance. Take a look at the circles here, black, green, and blue. All of those showing resistance into that pink zone, 1.0760, 1.0790. So what this tells us is it's a difficult place to go long or buy the euro dollar underneath or within that pink shaded area. And even in our most recent time frame, the past 3 days, has found resistance there. So again, we know that this is resistance at the pink shaded area. It's a difficult place to go long or buy underneath resistance. If we're going to buy it, we want it to either go back to the last support, which at this point will be the blue zone close to 1.0700, or break through that pink shaded area. Until it does that, we watch for potential intraday resistance at the pink zone, possibility of reversal to go back to the blue zone or lower. Let's take it down to the 4-hour time frame. And as we get down here to the 4-hour time frame, again, nothing really new here on this time frame except the fact that we're continuing to find resistance into that pink zone, and just not a great place to go long. It either needs to dip to support or break through the resistance before you go long. Otherwise, intraday opportunities could abound for resistance and reversal and a little bit of a pullback in favor of the US dollar on both the dollar franc and the euro dollar. Moving over here to the GBP USD, it's the same scenario. We see the black circle and the blue circle back here on the left-hand side where the yellow shaded area is 1.2390, 1.2418 or so. You can see resistance there. If I zoom it in a little bit here, you can see this wider blue rectangle also showing support. Well, we know that that yellow zone between 2390 and 2415, let's call it, is resistance. And not only that, you see the 100 period simple moving average coming into play here. So not a great place to go long and buy this currency pair because we're at resistance and a potential reversal point. The only reason to buy it is that it goes down to support, at least at this point. That's all the way back down here towards this green zone, or it breaks through the yellow zone to go higher. Until it does that, resistance and reversal is a clear opportunity here for the GBP USD. Take it down to the 4-hour time frame, and again, we're already starting to see some price action of selling pressure coming back in for the early parts of this week with the current candle. I'm going to probably wait until this current 4-hour candle finishes before I know that that's going to be a bearish look to it. But as long as it stays like it is or lower underneath that yellow zone, could provide us an opportunity to potentially look for some intraday shorts until it gets back down to the green zone, and maybe a turn back in the direction of the trend. Turning over to the USD CAD daily time frame, once again, nothing really new here. We're into resistance. Look at the black circle back here. We saw resistance and reversal from this purple zone 33.30 to 33.55. That's where we are right now. If we're going to go higher, look back here towards the blue circle, left-hand side. It needs to get above the purple zone to go to the next resistance, which is the purple shaded area. So the blue circle is your clue. If it's going to go higher, it needs to do that. If it's going to go turn around and go lower, it needs to stay under the purple zone like the black circle. So let's go ahead and take it on down to the 4-hour time frame. Look at the difficulty it's having here inside that purple shaded area. We looked at that last week, actually. So one of two things is going to happen. This is kind of a hinge point in the market. It's either going to break through 1.3355 and go higher to the next resistance, or it's going to finally bounce off of it and go lower back down to the yellow zone or lower. We don't know which is going to happen. So look for low risk and high reward opportunities in one of those scenarios. If it becomes a dollar positive week, we look for this to turn back higher again. Anything negative for the US dollar again this week, we'll look for this currency pair to go lower. And of course, we always have the Canadian dollar to factor into that as well. Turning over to the US yen, let's take a look at this currency pair. We have been kind of in a long-term range, if you will, here for this currency pair. We go back to the left-hand side of this blue box here. The left-hand side of the blue box is January 10. So since January 10, which is a couple of months now, we've been bouncing around inside this blue box. What's important this week is that we're at the bottom of that range. Since January 10, it's had a difficult time down around the purple and green zone at the bottom of that blue box. Let's zoom it in one time. There it is right there. You can see bottom of the blue box, the purple zone holding support now. It's held support before. Look at the black circles on the left-hand side. So again, it doesn't become very enticing to go short on top of that purple shaded area. That's 112.70, 112.45, because there's been historical support here. The only reason you would go short is either it goes back up to resistance, which at this point is the orange shaded area, 113.15.40, or it breaks through that purple shaded area to go lower down to the green zone at the bottom of the chart. So those are some of the things that we want to watch for as we go through the early parts of our week. Now, doesn't have to go down, of course. We could see some reversal and a turn back higher again. I would say that if it gets back above the orange zone, we could be looking for some further reversal. Back to the 4-hour time frame, we are seeing some bullish pressure right now, so we'll definitely watch that as we go through our day. Staying within and above that purple zone obviously is support right now. So watching for an opportunity to go long may be in the cards for us today at 112.70 for the US yen. Moving over to the AUDUSD, this is a very interesting one that we've been studying over the past few weeks. Take a look at the green shaded area, very top of the chart. Circles, 1, 2, 3, 4, 5. I could put more in between the black and the blue circle. I could put some more, but there's been multiple instances over the past year since March of 2016 of resistance between 77.20 and 45. So really gives us no option. We do not want to go long yet unless it breaks through that green zone. That green zone is resistance. Multi-month, all the way back 1 year, we have found resistance into that green zone. So don't go long as it's underneath that green shaded area. Take it down to the 4-hour time frame. Now that we know that about that green shaded area, take a look at some of the price action we're seeing here inside that green zone in the current 4 to 8 hours since market open this week. We've seen the market finding resistance and a significant reversal, influx of sell orders, leaving a long wick on top of that candle. I definitely would like to see it get back underneath 77.20. If it does, I think we're looking for at least some intraday push back down into the upper 7600s, the blue shaded area here. And of course, anything under there, we look for further reversal. So don't go long here. That's the first clue. Potential for some intraday reversal. Only reason to go long is these are dips back to support or breaks through that green shaded area for the Australian dollar today. And lastly, over to the Nzdusd, significant resistance is seen here at the orange zone. We've seen it before. Last 3 days at least. 70.20 to 70.40 is the orange shaded area. So at least right now we're finding resistance at the orange zone as we have for the past 3 days. We don't want to go long now unless it breaks through 70.40, which is the top side of that orange shaded area. We've seen some congestion where the red circle is, support where the black circle is, and resistance where the black box is. So it's a similar and familiar area. We've had a little bit of retracement of the downtrend. So is it time for it to go down again? That's a possibility. Let's go ahead and take it down to the 4-hour time frame. Look at the difficulty it's having here at the orange zone, and look at our last 4-hour candle signifying an influx of sell orders. It was a big bullish candle. Suddenly there was this infusion of sell orders. Price action that implies that sellers are looking to go short, and it falls right back into the orange zone 70.40 or so. Watching for further evidence of reversal back underneath 70.20. We could even see this back to the pink zone in towards the 69.80 level. So again, don't go long now. It hasn't satisfactorily broken through that orange zone. Possibility of watching for reversal. The only reason to consider going long is it finally breaks that 70.40 level for a continuation higher for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.